Now, without any further ado, I'd like to introduce our very special guest today, the legendary Arlene Dickinson. Arlene is a serial entrepreneur and general partner of District Venture Capital, a venture capital fund focused on helping market, fund, grow entrepreneurs and their companies in the food and health space. She is a 3-time best-selling author, podcaster, and accomplished public speaker. And she's obviously widely recognized for her role as a Dragon's Den and venture capitalist for over 12 seasons on the multi-award-winning CBC television series Dragon's Den. Arlene's leadership has been recognized many times, including Canada's Most Powerful Woman, Top 100 Hall of Fame, the Pinnacle Award for Entrepreneurial Excellence, as well as Profit and Chatelain's Top 100 Women Business Owners. She is a Marketing Hall of Fame Legends inductee and the proud recipient of the Queen Elizabeth Diamond Jubilee Award. Arlene has served as for many years as the honorary captain of the Royal Canadian Navy. Sounds fascinating. Got to talk about that. And sits on several public and private boards where she's actively involved in supporting both community and country. Ladies and gentlemen, it gives me immense pleasure to welcome the one and only Arlene Dickinson. Arlene, thank you so much for joining us.
Mo, it's my pleasure. Thanks for having me on. I love this series and everything you're trying to do and all the fundraising you're doing. So it's a pleasure to be involved.
Thank you. Thank you. Really excited to have you with us. And so let's dive right in. So I think that the best place to start, is everyone knows you as this iconic Canadian business leader and obviously to some extent celebrity, but really things did not start out rosy for you. And as we've talked about your background, you didn't have the luxury of a university education. You were a single mom. You had no technical skill sets when you started your first company. So how did you manage to pull that off? And perhaps it would be great to hear about who or what were some of the greatest influences in your life to help you get there.
Yeah, I mean, you outlined some of the challenges that I faced as a young mom. I had 4 children. I was a single mom when I was 30 years old and without a university education or any training or skill set to speak of. And what they say about mother, in necessity being the mother of invention. I think necessity drove me to invent myself, and I just didn't know what I was going to do. So it was one of those, you take a job, you take whatever you can do to put food on the table. And my children were my motivator. So when you ask me kind of what influenced me, I would say it's this need to make sure that I'm providing for my family, that I was doing everything I could to make sure that they were okay. And in doing so, I had to rely on myself because it turns out I was a really crummy employee. I took a couple jobs and I really sucked at it. I'm just going to say I was not very good as an employee and got fired from a couple jobs and then ended up having to figure out how I was going to use my own mentality and own mind and hands and skill set to build a business. And so that's what I did.
And so you went out, you built, this incredible Ventures Communication, huge success story in Canada in the domain of marketing and communications. How did you shift from that to venture capital? And even within venture capital, how did you discover where you can play in this ecosystem with some kind of competitive advantage?
Well, one of the advantages of being on a television show that is all about people pitching their businesses to you and also being a marketer is I was starting to see what was going on in the world relative to, food and how people were thinking about food and how it related to themselves in terms of diet and availability. And, this is going back several years now. And as I was on the show, I was seeing literally thousands of pitches. So over the course of 13 years, I've seen, somewhere north of 5,000 pitches. And so you start to see patterns emerging. And when I was on the show, I kept thinking, there's got to be an opportunity here. So, as a marketer, you look at what's going on in the zeitgeist, what's going on in pop culture, what are people thinking about, caring about? And then as a business person, I was thinking about, well, there has to be an investment thesis here. And those worlds really collided for me. So I started to spend a lot of time. I started investing on my own just as an angel investor, doing investments in some of my staff who were starting businesses, some people that I knew. And then on the show, I started to do, more serious investing. And then through that, I started to understand that there was this real opportunity in the space that nobody was really capitalizing on. And so that it was a combination of my marketing experience and expertise doing some investments on my own and learning about them and having them be successful, also having some unsuccessful ones, because listen, anybody who's told you they've only ever done successful investments, I'd like to meet them, because I certainly have had some failures, but I've also had a lot of good successes. And then kind of watching on the show what people were pitching and the innovation that was coming in front of me, and seeing that opportunity in the food and health consumer goods space.
So maybe let's dive into that a little bit, the food and health and consumer goods space. So how would you describe that strategy generally? And then why food, why health, why consumer goods? And for a venture fund, it's sort of a unique, perhaps even contrarian approach, where most people are sort of right in there with high tech. So talk to us about how you would view your strategy and why the specific areas in which you play.
So again, as I was on the show, Mo, I was seeing all of these innovative ideas in the food and health space, and seeing all these consumer goods companies who were coming up with great ideas, but in Canada, we're not getting any traction whatsoever. And they were really falling off the growth cliff that happens in Canada. There was no growth capital for them. People didn't understand the consumer goods space, and people weren't thinking, as you said, everybody was thinking about technology or energy, the very traditional Canadian investment theses that are out there. And so I thought to myself, well, I'm going to take my capital and I'm going to invest in a fund that invests in these spaces, because this is a great opportunity. Because as I said, what was happening were people were thinking more and more about food and how they were consuming food. And there was this intersection between what we ate and how we felt. And people were starting to understand that the efficacy of the food they consumed was actually having a real impact on their health and their opportunity to live well. And so I couldn't find a fund. And it just amazed me. So then I thought to myself, well, I think this is a real white space in the venture capital world, and decided to go and raise capital to invest in the space. And it wasn't without doing a lot of homework. I, of course, looked into the US, where there are many VC firms in the US investing in the space. Many of them are significant size, into the billions of dollars, of hundreds of millions of dollars in VC funds. There's large ones, PE firms doing it. And in Canada, there was really very, very little. Food was a part of people's portfolio. It was something that some VCs kind of dabbled in as an extension of what they were doing, but it wasn't a thesis there. And so the strategy I had was to build what I thought needed to be built, which is an entire ecosystem of support to ensure that if I was going to invest at these early stage companies, that there was a continuum of support for them. So right from the ideation stage through to, series B and C, how did we help them along the way? And so the whole thesis of Venture Park started to form in those early days.
So I'm going to come back to Venture Park in a second, but maybe if you could elaborate a little bit more on why Canada, and also if you could spend a little bit more time on just diving into some of the changing consumer patterns that you're seeing within food and diet and health. Right. So let's start with maybe a little more on Canada, and then shift into that.
So I am an immigrant to Canada. I came to the country with my family from South Africa when I was quite young. And I was raised to believe in contributing and giving back to the nation that had given us an opportunity to live here and to build our family and our homes here. And what struck me as I was growing up in Canada, and what continues to be something that has always, I felt, been undervalued, was this idea that the nation was really good, and we are really good at creating commodities. We're very good as an ingredient builder. We have corn, we have wheat, we have rye, we have all of these different ingredients. Sure. And then we take those ingredients, even down to our water, and we ship them somewhere else to other countries, who then turn them into products that we then buy back. And I know that the real margin, the real value in these ingredients is in the last mile of consumption. It is from the point where they're actually in some way processed, packaged, produced into a form that consumers will then use. So that's where the opportunity lies. That's where the margin is. But in Canada, we weren't focusing on that at all. We were like literally, and we continue to in many respects. And so my belief is that no stick should leave this country without value added to it. That when we start to think about ourselves as a country and a nation that can actually add value to the raw goods and ingredients we have, that's when we can start to compete much more effectively on the global scale and are much less likely likely to be impacted by the global trends around commodities and what's happening with those prices, because really at the end of the day, it is about the last mile of consumerism. So that's what kind of got me that started in thinking about why Canada. Canada is, and then there's another point to that, Mo. First point is we have all these great raw ingredients that we're not doing anything with. And the second point is that Canada has an enormous amount of talent in the agricultural and health sectors. So if you think about sectors that employ the most Canadians, sectors that, have a lot of innovation, sectors that have a lot of opportunity, I believe it's ag and health. And so that was all part of the thesis and the foundation of why Canada and why now and why, when I started the fund, why then?
And so maybe if I could ask you just to double click a little bit deeper on what you're seeing within food and diet and health that you're most excited about today, and some of the either micro or macroeconomic patterns in that arena.
Yeah, I don't think it's going to be a surprise to anybody on this luncheon. If you think about going back when I started this fund, 5, almost 6 years ago now, when I talked to people about food and health, they were certainly starting to be more aware of their consumption and the intersection with food and how it impacted health and what they were doing. But it was very early days. And so when I started the fund, people were going, is there enough deal here? Is there enough space here? Is there a real opportunity? Well, if we fast forward through the fund, unfortunately, and tragically, a pandemic happened. And through that pandemic, what we have all learned more than anything is how important food is to us, how important it is to and our health. So we need to make sure that we have access to food. So food security has become incredibly important, not just in Canada, but around the globe. Food safety is the food we're consuming good quality food. Again, a global trend, something that's happening in every nation. And then, thinking about our health, like what are we doing to make sure that we're protecting ourselves from potential viruses and keeping ourselves as healthy as we possibly can. So if you think about these trends that are happening and what's really going on from a consumer perspective, we're worried about our diets more. We're worried we have dietary concerns like we've never had before. So people are allergic to things. There's people who are vegan, people who are pescatarian, people who are flexitarian. So people are vegetarian. All of these different aspects of diet have changed. We're worried about where our food is coming from. We want to know what the traceability. We want to actually get down to what farm did it come from? Is it ethically managed? Is it from a socially responsible company? And all of this has really burst open in the last couple of years as we have all grappled with something that is fundamental to human beings, which is how do we stay alive and keep healthy and make sure that we are well nourished. And this is the thesis of the fund that actually got accelerated significantly, because then people started to understand that, yes, there is an investment opportunity here, but there's also real good to be done in terms of investing in the space, because it really is a social platform as well. In terms of the macroeconomics, I mean, commodity prices and the fluctuation in commodity prices, interest rates, and what's happening as people worry about the rising cost of food, and thinking about how do I access more local food to make sure that it's less expensive, but also that I know where it's coming from. These trends are actually also impacting us in a real way. So the fund kind of started off in this very, as I said, very nascent, to your point, people were in spaces and sectors that everybody understood. It started off there and it evolved into something that really has become much more mainstream, because people are starting to understand the impact of food supply and also health, and how that is so important to our well-beings.
So, I mean, you mentioned sort of commodity pricing and some of the supply chain shortages. I guess the question that I'd have is, a lot of the companies that you're funding and that you're supporting and seeing through to hopefully maturity, these are small businesses initially. How are they competing? How are they able to compete with the big guys? They're very large incumbents. Are you finding them more or less vulnerable to supply chain shortages and commodity pricing? And I think maybe that leads to just a broader question. What challenges or macroeconomic challenges around food and health are you most concerned about in the sandbox in which you play?
So these companies that we invest in are early stage. They're not startup; they are early stage. They have proven revenue, proven traction. We have companies in our portfolio that are doing north of $60 million, and some that are doing, it's just $2 million. So yes, they're small in the context of things, but they are revenue generating. And how do they compete? Well, the large companies that you spoke about in this space, they are really challenged with innovation. They're really challenged with being able to turn their attention and their resources and provide a place that allows for innovative ideas to foster and grow. And so what you see is these large CPG companies, you see global entities looking for innovation, and they are looking to Canada because Canada is really good at this. And so, yes, they are smaller, but there is enormous opportunity for exit with them because of the innovation side of it and because of the intersection with food and technology that's also happening. And that's about manufacturing. That's about making sure that we're applying the right technology to the manufacturing of the goods that we invest in. And then, what am I worried about? From a supply chain management perspective, and you addressed it in your question, yes, we are concerned about ensuring that we can get the bottles and the boxes and the packaging and and is it environmentally conscious? Is it ESG compliant? All of these things that we worry about. Those things are going to impact us. And do they impact big companies the same way? No, because they usually have better, deeper relationships. They have more dollars. They can have those, deals. But what we've done is we've taken all of our businesses and combined them. And we've created partnerships through Venture Park, which I can talk about a bit later with you if you'd like. But Venture Park, this business growth ecosystem, has deep partnerships with global multinational organizations who provide support to our early stage companies and help them access things that they otherwise couldn't. So, maybe they can't on their own get it, but collectively our funds portfolio has access to not only the portfolio on wholes buying power, but also the buying power that they get by virtue of the relationships we've built and the sponsors and the people who support our ecosystem.
Yeah, no, that's great. I want to jump into Venture Park in 1 minute, but before I do, I just want to pick up on something you said, which is, that you're seeing a lot of innovation in them and technology in the manufacturing side of the equation. So perhaps if you could elaborate on where, if anywhere else in the fund or in some of the strategies in which you're involved in, is there a tech or a data play broader in the consumer goods space, and how might you be participating in that?
We do have a couple tech investments in our space, in our fund, and we're very selective about them. They have to somehow be adding value to, the thesis of what we've got. So are they helping through just helping distribution be more effective because of technology plays, like you think about companies like Skip the Dishes as an example, or Neo Financial, which we're invested in, are they helping retailers be able to compete more effectively against large retailers? Number one. Number two is the technology that they're deploying, allowing our portfolio companies to participate in a way they couldn't otherwise because they are small. And I do think that technology happens at robotics in terms of manufacturing, technology in terms of packaging, making sure that it's actually biodegradable and it's resource efficient. Technology in terms of carbon offset, and carbon footprint. So all of those things impact the food and health space in the consumer goods arena to a great deal, and we're on top of that.
Yeah, that's great. So let's come back to the Venture Park, which you've referenced twice, and you've built this really unique, or ostensibly built a very unique ecosystem in the CPG space through Venture Park. Talk to us a little bit about that. So you've said why you do, like what value it creates, how it supports district ventures. If you don't mind, maybe even just the evolution of it would be great.
Sure. So as I mentioned, when I started the fund, it started off thinking about a fund, a traditional VC fund, and that's what we were going to build. And then it didn't take long for me to kind of really think through, well, what happens before and after these businesses come into our fund? How do we really build a more robust platform that actually goes past just capital investment so that we can build a moat around our fund? So the whole notion was, how do we build a moat around the fund so that other funds, when we compete for deals, we can be the group that actually wins the deals and hopefully wins them at a better multiple because we actually offer so much more. And so I did a lot of studying on business growth ecosystems, on ecosystems in general, and how business looks at ecosystems and how they can really support theses. Mm-hmm. And so a business growth ecosystem in my mind it's a couple things. It's diverse businesses that operate very uniquely. It's diverse businesses that have their own way of making money, so their profit is derived differently, and it's diverse businesses that all serve a common purpose. And so what I wanted to do was figure out how can I take businesses that are all supporting early stage food and health and personal care companies. How can I take them and build this business growth ecosystem when I'm really just doing it on the managing fee of a fund? And so what I did is I stood up 2 not-for-profit. So when I talk about making your money differently, 2 of the companies inside of the Venture Park ecosystem are not-for-profits. And they are under the name of Venture Park Labs. And Venture Park Labs is a accelerator. So it's Canada's largest accelerator in the CPG space for food and health and personal care companies, and a commercial kitchen. And the commercial kitchen is in Toronto, and the accelerator is headquartered in Calgary, but it is a virtual program now. We have put through over 100 companies in that ecosystem in the last 5 years through that accelerator program. Last year, they threw up $160 million in revenue into the Canadian economy and employed thousands of people. And that happened in an accelerator program that is a not-for-profit that we don't benefit from, that there's no interaction other than we know that we're fostering ideas and getting these very, very early stage companies to get to a stage where they are investable. So where the fund does benefit is it gets to see these companies, it gets to see the innovation, it gets to invest ahead of anybody else. The commercial kitchen is a 20,000 square foot facility that houses people in our portfolio and people in the food and health space just to go in and produce goods and to innovate. So that's the one part of the ecosystem. The other part of the ecosystem is
it's like a Y Combinator for CPG. Like that's
a little bit. It's a little bit, although we don't take equity in the deals that way, the same way they do, but similar. We have ours are not for profit. These are the accelerator and the kitchen, but then we also have 2 marketing firms that are attached to this. One of the marketing firms only does work for the portfolio companies, and it is expert in the consumer goods space. And the other marketing firm is a larger marketing firm that does work in the CPG space for larger companies. So again, deep resources in marketing, because you can't be in the consumer goods investment thesis without understanding marketing. I mean, marketing and branding are what builds consumer goods companies. So we have 2 marketing firms. And then we also have Venture Park Voice, which is a media platform to help amplify the voices of the businesses we invest in. So we've got a media platform, and it makes its money in SEO and search and writing e-newsletters. The marketing firm makes its money in terms of commissions and fees. The accelerator and the lab make its money in terms of sponsor dollars. Don't make money because they're not for profit, but they are funded through sponsor dollars and a very small entrance fee. And then we've got the fund, and these 6 organizations collectively all get together and all get up every day to do one thing, and that's to make early stage food and health and personal care space businesses and the consumer goods companies scale. That's it. But they all do it differently. And it's a fascinating model. I think it's working incredibly well. We're doing an economic impact study right now on what this ecosystem is able to do for Canada, and we believe that we're going to be able to demonstrate, I'm hoping close to $1 billion in value to the Canadian economy by starting with a fund and thinking about what else we needed to do to help the entrepreneurs.
That's an amazing story. And so when I'm curious how you think about risk and, other than all the standard risks that every early stage business can be exposed to, and some of the risks we've already talked about on the supply chain and commodity side, are there any other unique risks that you're thinking about within the context of your strategy that would sort of be interesting for people to know about? And how are you handicapping it?
Well, yes, there are. I mean, distribution and being able to get the goods and being able to scale for these companies is it's tricky. It takes a little bit of patience because, it doesn't happen in year 1 or 2. Generally, it happens in year 4 or 5 generally. So it does take a little bit more time. And it also requires a very specific type of entrepreneur who's very scrappy, but also very visionary. And so I'd say, in terms of de-risking it, what we've done is, in thinking about scaling, we have partnered with some of the largest retailers in the nation and into the US. We have created relationships with brokers and distributors. We have created relationships with data companies. So we have de-risked it by adding value, but also it helps us as it gives us a line of sight into the investment to see whether or not in our due diligence, we believe there's a market there.
Right. That's cool. You mentioned earlier that, you've never met an investor that hasn't taken some losses, taken some hits. When you think about, some of the hits that you've taken in your career or some of the losses, which ones stick out as most instructive, most memorable, or perhaps, really changed your thinking in the most meaningful way?
I'm going to say something that's going to probably feel contrarian to what people might think, but it's not the ones where I bet on the entrepreneur. It's the ones where I bet on the idea. Where I love the product so much. And I thought this is the best product and I love the taste of it. Or I think this health product is going to be amazing. And I maybe glossed over the entrepreneur to some extent because I just believed the idea, was so great that anybody could basically build it. And that was a real lesson for me, which is, yes, we need to care that the product is excellent, but the entrepreneur still is first and foremost the most important element of a successful business in my mind.
Yeah. No, that's a recurring theme on these conversations.
Yeah.
So I want to touch on something which, and tell me if this is less interesting, but it's remarkable, what you've been able to sort of achieve both as an entrepreneur and now as a female GP. And I'm sure that, you're aware you're unique in the landscape. So maybe you could talk a little bit about what challenges or perhaps even opportunities come with the territory of being a female GP and, any lessons or experiences that stand out that perhaps other men and women should be considering.
Yeah, it's a really interesting question, Mo. I when I first started off, I'm well enough known in the country. People knew for the most part who I was when I was walking into a pitch to talk to them about the fund. But you can put all that into like a ball this big, and it means like that's what it means. The scheme of things, it gets you maybe get to the meeting, but it doesn't get you the investment. And what struck me as I was raising was if somebody who's well known and is known as an investor and who has a good track record, if I struggle with raising, how hard is it for anyone else as a female GP to raise? And that's probably the biggest thing that stuck with me through my first fundraise, which was, wow, it's too hard in Canada to some extent. There's a lot of penalizing of first-time fund managers. I think there's an even double down on penalizing for first-time female fund managers. And I think there's a triple negative if I go first-time fund manager, female fund manager in a space that nobody really invests in. So, I really had all the headwinds against me. And I remember, Mo, when I was first raising, I started to raise, and it was a hard slug, man. It was like a lot of door knocking, which it should be. It shouldn't be easy. It should be difficult, but it was, and it was hard. And I'd gotten to about $16 million raised, and in my mind, I wanted to raise $100 million, and everybody told me that it was just insane. Like, don't even try to raise $100 million as your first fund. It's crazy, Arlene. Be happy if you 16, just go and deploy that and see how, that'll be good. And if anyone who knows me knows that I'm not, I just went, don't tamper my ambition. I think there's a huge opportunity here and I'm going to do this. And so I just kept quietly at it. Although there was times that I wanted to quit because I just couldn't see it. And then I was really fortunate to have some LPs that went, we love this thesis. We believe in this thesis. We're going to support you. And I got to the $100 million. It was It took me longer than I thought it would, but we got there. And now we're trying to raise $250 million. And of course, people are saying the same thing all over again, which is it's too big. How are you going to deploy it? Where is it going to go? And I can give them all the math. I can give them all the data. I can give them all the rationale. But it's going to take somebody who really believes in A, our team, B, our track record, and C, the opportunity that exists in this globe in the food and health space, which is enormous. So I'm very what's the word? I'm very bullish. I'm excited. Yeah, bullish. I'm very bullish. I was going to say boyish, but I'm not. I'm very there's a different thing. I'm very bullish on the space, and I think Canada suffers from this, kind of same mentality of, don't dare to dream that big. Don't dare to be, don't dare to raise in an area that hasn't been raised before. This is actually our Achilles heel. This is where the nation is going to continue to struggle if we don't allow people to push the boundaries of what is considered normal and support them. So, I mean, I'm a little soapboxy there, so I don't mean to be. But as a female GP, like, look past the gender and look for the opportunity. And that's what I would say. Has
it created any unique opportunities for you that perhaps a male in your position may not recognize or not capture?
Yeah, I think so. I mean, listen, I come through at things after years on being on Dragon's Den as the only female voice up there. I've learned I don't come at it from a female perspective. I come at it from a business person's perspective. I've always thought of myself, I'm a good business person, and I happen to be a woman. But where it does play is that a lot of the investments that we make are in with female founders. The food and health and personal care space is predominantly female driven. And so I can resonate with the female entrepreneurs. I understand them. So I think it's just one of those things that I can see what's going on with the women entrepreneurs that are out there. And actually, I want to say something that's, I think, really important. 50% of our funds investments are with females. That is not because we went and said 50% of our capital has to be deployed to female founders. It's because we said we are going to invest in the best possible entrepreneur that we can. And because of the space we're in, it happened to be women. And, and we didn't have a bias because I am a female GP, and I would absolutely be mortified if anyone ever said there was a bias at our against BIPOC, against female, against any gender. I would be mortified. So, I think it's fundamental. And maybe that's because I'm a woman and I come from a place of having been marginalized at some point in my career.
Amazing. It's just cool. Anyway, we'll get into some of the things that you shared there. But just before I go on, and you mentioned that, from time to time, people recognize you, so you'll get the meeting, and you mentioned Dragon's Den. Could I just take like a little brief hiatus from some of the VC questions just to ask you, how did you go from a marketing entrepreneur to a TV personality? Like, and what would people be really surprised to learn about that experience and how that may have shaped you?
Well, I was a very driven entrepreneur. I was busy building my business in the marketing space. And I was also I say this to people, I'm quite insecure personally. I'm very secure professionally, but I'm very kind of insecure personally. And I think that's true for many entrepreneurs, by the way, where we kind of don't really want to be in the limelight, but we're very good at our businesses. And I was busy building my business, and I got a call from CBC one day, and they said, your name's come up as a woman in business. And maybe back then, 17 years ago, there weren't that many female business owners that were of any size, unfortunately, at the time, but thankfully there are now. And they asked me if I wanted to audition for the show, and I said, absolutely not. Like, I was in marketing, like I knew what they did on television. I said, absolutely not did I want to go on the show. And I went home and asked my kids, and my kids said, well, Mom, you need to audition for the show. And I said, I don't want to audition for the show. And then, the words that you give your kids come back and haunt you later in life, and they always do. So I was always the lessons that you give them. So I used to always say to my kids when they were making hard decisions, what's the worst thing that could happen if you do this? And so my kids looked at me and said, Mom, what's the worst thing that could happen if you decide to go on the show? And I thought, okay, here we go. So they're making me answer the question I've always given them. And I said, well, the worst thing that could happen is that I would make a complete fool of myself at the audition. And they said, Mom, what are you worried about? You do that all the time anyway. So go and audition. So I went to the audition just to please them, because I can't tell my kids to put themselves out there if I'm not prepared to. And then they asked me to be on the show after the audition. And I went there not thinking I was ever going to get on the show. In fact, I ended up having a fight with one of the guys that was there beside me, one of the dragons at the time that was there just to be part of the audition. And when they called me and they said, we want you to do the show. And I said, what are you talking about? Like, I had a fight with your guy on the show. And they said, yes, we like that. We want you to come on. So then I went home and I said to my kids, you won't believe this. They want me to do the show now. And my kids looked at me and said, Mom, that's fantastic. Now, remember, this was year 2 of the show. It was a very small show at the time. And they said, Mom, that's great. You should do it. And I said, absolutely not. I told you I didn't want to be on television. I don't want to be on TV. And they said, why not? And I said, well, okay. I don't want people to judge the way I look. I'm too old. I'm too wrinkled. I'm too fat. I had all these physical reasons why I didn't want anybody to see me on television. And they looked at me and they all kind of in their own way said, Mom, what are you worried about? Who watches that show anyway? Nobody's going to see you. So I thought, they're right. It's a small show. Nobody will ever see me. I should do it. And the rest is history. And it was literally just, I walked through a door because my kids convinced me I should. And I didn't think it would. And I never thought it would last more than a season. And it's going into season 17. So,
incredible.
Yeah.
Incredible.
Changed my life.
And so how did it change your life? What were some of the learnings that kind of came out of that, that you probably wouldn't have experienced any other way?
Well, it led to this, Mo, at the end of the day, the learnings were that, there's so much opportunity in our country and so much innovation and so many really incredible entrepreneurs that I just have grown an enormous amount of respect for really, the people of this land. And what came out of it is investment and learning about it and figuring out this fund opportunity and creating this ecosystem and putting, hundreds and hundreds of millions of dollars of value back into our economy, creating thousands of jobs, doing something I never saw when I started the show, but actually gave me the opportunity because of the show to uncover and build.
Yeah, very cool. Just also, again, this is as you're well aware, and it's partly where you're supporting it, is this is a charitable event, right? And you've done an inordinate number of wonderful things, first and foremost for our troops as honorary captain of the Royal Canadian Navy. I'd love to hear a little bit more about that. Also, you were former spokesperson for Breakfast Clubs of Canada, which, by the way, our foundation has been really proud to support. Yeah. When you think about your involvement and your charitable involvements, what stands out as most meaningful? What some experiences are most memorable? And, maybe the Royal Canadian Navy, that's a fascinating place to go. But really, how do you think about some of your charitable engagements?
Charity is such a uniquely personal thing. And we all have places that we are close to our hearts because we've either been touched by it as a family or through a friend, or something has impacted us in a way. And for me, growing up, we were very, very poor. When I grew up, Mo, we had absolutely nothing. We grew up below the poverty line. We scrambled for food. And so, regular groceries in our house were didn't happen. And, we would go to the store when we could go to the store, when we could afford to, and there was very little food in our cupboards. And I think that history in the background really has played through my entire life and my career and what I do now. And so it is really all connected. Breakfast Clubs of Canada. I mean, I thank you for supporting that charity. They do so much good for children who go to school hungry. And I was one of those kids. And so to me, philanthropy is really about giving in places that you feel personally connected to, but also doing things that are important to the future of our country. And if keeping our kids healthy and well and fed isn't important to our country, then I don't know what is. So keeping that next generation whole is so important. The other thing, I've done through the fund, just to kind of bring it full circle around philanthropy, is we have committed 5% of our capital to BIPOC entrepreneurs. We also are committing 1% of our carried interest to give back to either community or charities or wherever. So the GP's carried interest, our carried interest, 1% of that's going to go back to the community, because we should, and it's the right thing to do. Female founders and all of the things I talked about earlier. And then, so I also just philanthropically, I also get involved with the legions, because I'm an honorary captain of the Navy, and I've been overseas 7 times to visit our troops. So I've been I've been on the front lines of war, and I've witnessed what happens there, and I've seen the impact of these men and women and the people that go and support our freedoms and our rights and everything we have in this country, and the peacekeepers. And so supporting them has become very important to me. So my philanthropy is tied to ensuring that we respect the veterans that who have gone and served our country, that we support those men and women and individuals who help us live freely, and that we help kids and women and children in particular with food safety, food security. So those are kind of my areas of interest.
Yeah, I mean, kudos to you for doing that. And again, I, personally as an American, and when I came to Canada, I was, in America, like the respect and admiration and support for the troops is at such a different level. And I think that as a country, we could be doing so much more for our troops. People just really don't have that appreciation here as they do south of the border. So, but kudos for all that you do on that front. Let me turn the conversation in a completely different direction. So, we had talked previously that your daughter is now leading your marketing firm, right? Yeah. And obviously she grew up very differently than you did, as did the kids of everyone on this call. And you shared, what humble beginnings you came from. What unique challenges do you believe she faces and other next gen members of affluent families that we didn't? Also growing up quite poor, I could relate. And you're also a mother of 4 and a grandmother of 5, which is pretty cool. How are you thinking about intergenerational transition and succession to the next generation?
Yeah, it's always on my mind, as I'm sure it is on everybody on this call's mind. We're always thinking about you don't want to raise entitled children. It's the last thing you want to raise. You want to raise children that are going to feel like they can reach their potential and do everything that's possible in their lives, without giving them everything, right? And you need them to be able to kind of work their way through stuff. And my daughter, Carly, who runs my marketing firm, has worked with me for 15 years. And I think the challenges she faces are fairly unique. Not only does she face the challenge of being my daughter and running the business, she also faces the challenge of being the daughter of somebody who's fairly high profile on television. And so she has a kind of double whammy against her relative to being able to come out of my shadow. And I have just learned to, continually support, help, and encourage her, but let her do her thing without kind of stepping on that. And so whether that's reporting through to different people than me, whether that's giving her the freedom and the flexibility to be upset and insecure and feeling like overwhelmed by it sometimes because she's not sure she's doing the right things. But also, she went to the Ivy School course. They have a 1-week course that they provide for second generation kids of, who are working in the business that their parents created. So she's done that sort of work. She's doing the work that's doing educational work. She's doing the work by talking to other kids that are in the same situation she is. I say kid, she's 40 years old, so she's not a child, but she's my kid. And she collaborates with others who are in the same experience. I try to set her up for success, but it's hard. It's really hard. And I think I would suggest to everybody, like, get your kids connected to other kids like them, because I think that'll help them significantly.
Right. No, I think that's a great piece of advice. And so your daughter's running the marketing firm, but you still obviously have marketing in every bone in your body. When you work at the companies that you work with, are there any specific marketing and communication mistakes that you just see commonly made? And how, what do you do to help your portfolio companies avoid them?
Yeah, I mean, listen, whether this is a $2 million company or whether this is a $2 billion company, because I've worked with every size of company as a marketer. I've consulted to some of the largest companies in Canada, and into the US, frankly, on this marketing strategy perspective. And the number one thing that they all do wrong is that they all go to the tactical execution before they go to the strategic framework. And they don't want to take the time, money to do the research, to do the heavy lifting of strategy, to really make sure they're framing the things that they want to accomplish in a way that people can respond to. And they get right to, what is that tactic going to give me? What's the return on it? What's the ROI? They get right into the detail on it because that's the tangible thing that they can see and feel versus the heavy lifting of the thinking. And so that is by far the biggest issue of all of the businesses, that they want to get right into tactics and get in market to do something before they do the heavy lifting of the thinking.
So, and maybe listen, the heavy lifting, the thinking, like you obviously bring a different approach to this whole game because you were an entrepreneur.
Right.
And how do you think that actually impacts how you are as an investor? Like having been an entrepreneur, like what unique traits do you find yourself bringing to bear that you see other VCs or perhaps other kind of professional investors not bringing to the table?
You know what? One of the things that struck me about the VC world when I first really got into it was how everything started with a financial conversation. Everything was about a metric. And nobody started a conversation with just like, how are you? How, what's going on? Like, what's keeping you up at night? What's happening with, how's your family doing through all this? Like those seemingly soft questions are so important to an entrepreneur because that intersection of personal, professional is just, it's one thing. And when we start with just the numbers, which is not where they're most comfortable generally, most entrepreneurs are not really good at the financial. And again, I've seen large companies whose financials, like I went, really, how do you operate your business? But they're operating because they're sheer willpower and skill, and they have a great idea. So I don't know. It's an interesting place to be. I think I get that. I understand as an entrepreneur that what is in my head and my heart as an entrepreneur needs to be articulated in a way that everybody else can follow. And what I mean by that is a lot of entrepreneurs, and where I think I have an edge, is a lot of them can tell me in a meeting what it is they're trying to do. And I talk to them long enough about what's keeping them up at night and what they hope to accomplish and where they hope to go. And I don't get right to numbers. If I do that, I can start to understand the strategy that needs to be pulled out of them and articulated in a way that their entire organization and the market can understand. And so I think that's what I bring, is I'm able to unlock what those entrepreneurs are really hoping to accomplish and help them articulate it in a way that the market will readily accept and their teams will readily accept. And that's probably because I am an entrepreneur, but B, I'm a strategist. So I think those two things come together. And I just get these people are they're getting up every day and sometimes all through the night. And all they're thinking about is, how am I going to save this business? How am I going to grow this business? How am I going to do these things? And when we get into meetings with the VC and all the person at the VC saying, well, in this model, you said you were going to have a 6 times ROAS, and you said you're going to have a CAC of $12, and you're now this, and not ask them what's going on. You've lost the opportunity to really help them because they're going to get driven into a rat hole on just metrics without understanding why the metrics are failing.
Yeah, no, it's great. Great response. And so Arlene, what keeps you up at night? How are you doing? How is your family?
Raising $250 million is keeping me up at night right now. What's keeping me up at night? We have a fairly large portfolio of 30 companies, and which some of them are quite small because we do some early, very, very 150,000, 500,000 our check size. But our large portfolio, our group, we're investing anywhere from $3 to $6 million. That just helping them is keeping me up, making sure that we're delivering what we said we would, building this ecosystem and making sure it's strong and resilient, and that moat is impenetrable. That's what keeps me up at night. And then I worry about my 4 kids and my 5 grandkids when, like all the time. So
yeah, no, I get that. I totally get that. So just given everything you shared, and obviously, you and I've talked about this before, you always are eating your own cooking. And of course, you're going to be allocating into your fund and into the strategies and into the companies. But if I could kind of walk through a hypothetical with you, which I often ask some of our guests, is, imagine you wake up this morning or tomorrow morning and 100% of your assets have been liquidated to cash. And now you're rebuilding your portfolio, your asset allocation. You have $100, whatever else. What is that going to look like? What is that asset going to look like? Where are you going to allocate that capital outside of your fund, which you will obviously commit money to? And outside of that, where do you have conviction today?
I mean, outside of that space, I have a deep conviction in clean tech. I think clean tech is something that we just as a nation and a globe need to be focused on. So anything that has to do with environmental challenges and helping the world kind of operate a little more cleanly is very important to me. So from water through to kind of how we produce our energy and store our energy. I'm also really interested in any technology that is health related, that actually helps people to be able to connect more effectively to tools that will actually help themselves get access to doctors, get access to the resources that a lot of remote communities in the world don't have access to. So I'm very interested in that. And, while I have a very high social conscious that way, I also know that there's a lot of capital to be earned in terms of some of that space. I'm still very interested in the whole kind of, although in Canada it's almost, maybe it's a bad time to say that, but I'm still very interested in the real estate space. As it heats up, I'm not, it continues to worry me also at the same time. And then I think anything to do with the long-term care situation in Canada and how we can actually help ensure as we get older as a society, how do we invest in places that can actually ensure that we're delivering on the best possible quality of life to seniors. And again, great investment thesis, but also a real need.
Mm-hmm. Has the last 18, 20 months, whatever it's been that we've been under COVID, under this pandemic, has that changed the way you view the business landscape? It changed your personal philosophy in any way? Has it had any permanent impact again on your beliefs?
No, if anything, it's underlined them more. If anything, it's just made me more sure than ever that what we're doing is the right thing to do at the right time to be doing it. And this is a troubled world we're living in, and people require support, not just in every way, but we need to make sure we take care of ourselves, and not just ourselves, meaning this country, people here, but people around the world. And so no, it hasn't deterred me. In fact, it's made me more convinced than ever before that it's important.
And I think we probably have time for just 1 or 2 more questions. Let's try squeezing 2. So first question is when you've kind of been at this VC game for quite a while now, but what do you wish you knew when you started investing in VC that you know now?
I think if I'd known how hard it was, I probably might not have done it. That's spoken like a true entrepreneur. It is really tough work. I people sometimes dismiss VCs and say, oh, they sit back and take credit for everything. We work so hard, and I didn't realize kind of the extent that this would kind of how much work there was. I knew it was going to be a lot of work, but I'm not afraid of work. So yeah, that's probably the thing I learned the most, is that it's a lot of work, and there's a lot of risk attached to that work, and you've got other people's money, and there's a lot of responsibility that comes with that. So yeah.
And if I had to ask you, if you think back about the best piece of advice that anyone has ever given you, what comes to mind?
That it's all going to be okay.
That's great. You know what? It's interesting, and you actually in your books, and by the way, we didn't really get into your books, but you've written 3 bestsellers, and they're phenomenal. And in many ways, that's kind of the running theme. It's going to be okay. You know, you're going to be all right. And so, any books or any thought leaders that have been particularly impactful or influential to you in your life?
We talked about him earlier, actually. I have so many people that have helped me along my journey. I've been really lucky that people have taken the time to talk to me and spend time with me and support me. And I know how fortunate I am in that space. But the person who probably in the last few years has helped me the most, both from literally helped me just think through things, is John Ruffalo. John Ruffalo has, he's given me his time, he's given me his attention, but most importantly, he's given me courage and encouragement. And so I would say he's just been a phenomenal mentor to me. And after his accident, he also showed me strength and determination and how important it is, your mental attitude and what that means. And so he's just been probably, I'd say in the last, 5 years, my biggest mentor.
And I know I said it was only going to be 2 or 3, but last one, promise. You have on the call, and there's obviously people that are going to be listening to after this are going to be largely allocators of capital. Any advice that you would offer to allocators of capital as they're thinking about their venture capital portfolios, as they're thinking about investing in a future that some of us are struggling to understand? Any parting words of advice on that front?
Yeah, I think, I'm balancing your portfolios of investment is really important, and making sure that you're not overexposed in any one sector. I get that. I would say that to keep an open mind, to think about things that may not be obvious to you and may feel a little nascent, but again, it's no different than when I talk about backing an entrepreneur and how important that is versus the product itself. I think in this space, backing the GP doesn't mean us necessarily always somebody who's proven themselves to be a fund manager at the beginning. I know this is very risky, but there's always, what I've learned in this business is that people will say no for a whole bunch of reasons, but generally it's no because they just don't like the space, or they just don't think that you've got the right whatever. Tell people why. Tell people what your objections are. Let them see if they see if they can answer them, see if they can overcome those challenges, but keep your mind open. There could be another district out there or a district out there that you could invest in that could actually help your portfolio do very well. And it may not, because it's not tech, doesn't mean it's not good.
Yeah, no, there may be another district, but there's not another Arlene out there. So I really, this was such a pleasure. So fantastic. Thank you very much for joining us today and sharing your incredible insights with us. And I can't tell you how much we appreciate your generosity of time and wisdom, and hope to do it again soon.